All right, we are live here. Monday, change of scenery here. We usually come live on Thursdays, but Nick Ducoff from Solana Foundation, we are very excited to have you here today. For those that are unfamiliar with Nick, Nick leads the institutional growth over at the Solana Foundation, supporting digital assets, tokenization, and permissioned environments. He previously was a VC or venture partner at G20 Ventures and an angel investor focusing on blockchain investments, including Unchained Capital, Flipside Crypto, Mintio. Nick also co-founded two VC-backed tech companies that were acquired, InfoChips by Big Data Systems and EdMet by College Financial Decisions. And as an educator, Nick taught entrepreneurship at John Cabot University, served as VP of New Ventures at Northeastern University, and also co-authored a best-selling book in education of finance, was invited to the White House for his work in education by the Obama and the Trump administrations. So a lot of words there here. Nick, excited to have you and hear from you yourself. Welcome to Blockfield.
Thanks for having me. Excited to be here.
Yeah, Nick, welcome. We'd love to hear just, as we're talking about your background, just before we get into some of the real meat of the questions, is what led you to where you are today at Solana? Like, is there any, consistent theme? How do you go from selling two companies and, the beautiful exit every entrepreneur looks for into saying, hey, I want to go be an employee again. And because I believe in this mission. And I think that's a compelling question to say, hey, like they must be really doing something.
Yeah, for sure. So maybe it's helpful to start with how I got into the blockchain, because that's ultimately what led me here. When we sold our first company in 2014, my co-founders had been Bitcoin hobbyists. I really hadn't been paying too much close attention to it, to be honest, as I was just focused on building the business. But when we sold the company, they ended up YOLOing into Bitcoin. And that's when I started to really, began, investigating the space, bought my first Bitcoin. And they ended up starting a company called Unchained Capital, which I invested in to solve their problem, which was key management, security. And Unchained Capital is one of the larger multi-sig custody protocols for the Bitcoin ecosystem. And, as with many people, my education in Bitcoin led to an interest in Ethereum, which was just getting started around that time. A friend of mine here in the Boston area named Dave Balter was starting a company called Flipside Crypto, and he was really looking into all of the kind of programmable blockchains, starting with Ethereum, and at the time there were a lot, including Solana, that were just getting started. And I did another company, nothing to do with the blockchain space, but was continuing my interest as a hobbyist in the space on the side. And when I sold that company in 2021, my wife said, you gotta make this your day job. Like I'm building a company during the day and I'm doing crypto at night. So I was very fortunate to turn that interest and experience into being a venture capitalist focused on blockchain investing in 2021 until I was recruited to Solana Foundation in 2023 to build out the institutional go-to-market and lead the tokenization efforts for institutional growth. And why Solana? It's really simple. When I was a VC and I would ask founders, why are you building on XYZ blockchain? Why are you building on Algorand? Why are you building on Avalanche? Why are you building on Polygon? Invariably, they would say, well, they gave me a grant, But whenever I talked to someone building on Solana, it was never about that. It was always like, the tech's amazing, the community's incredible, the documentation and APIs are amazing, the documentation and open source tooling are available. Like it was just all about the tech, right? And the community. It was never about, the subsidy. And, as a VC, like you pay attention to that. And so I, really began investigating Solana in earnest around 2021. I wish I was earlier, but I guess it's never too late. And then when, I got to know some of the team in the summer of last year as they were thinking about creating this role, it was just super clear to me that this was an awesome opportunity. And as far as being an entrepreneur, and working for a, nonprofit foundation like Solana, first of all, we're super small. I don't even think there's 70 employees at the Solana Foundation. So it's very, very entrepreneurial. Two, many of us, including our president, Lily Liu, have entrepreneurial backgrounds. So, as far as I'm concerned, it's still very much a startup, and we're solving really big problems at really big scale, and that's always really exciting to have a great group of really smart, hardworking folks aligned to go help support the ecosystem to make Solana even bigger and better than it is today.
Yeah, I had the opportunity actually to talk, and it was a funny story but I got to talk with Anatoly on my last podcast for Pounding the Table, and just really interesting because we were kind of joking about the Solana phone at first on my previous podcast, and we're like, how are they going to be able to compare with like a Microsoft or an Apple just on the hardware and the costs that go into the research and development and everything. And so it was fascinating though, talking to Anatoly a while back, and his background too. I think it was US Cellular. Correct me if I'm wrong, but it was one of the for like 15 years or so. Yeah. And so you guys all came from this institutional, and so the kind of backgrounds in that sense. What is that role like? At Solana, if I may ask, in terms of like, and maybe explain the exact companies you're talking to, but like the types of discussions you may be having today.
Yeah, sure. So my role is focused on getting banks and asset managers to adopt the Solana blockchain. And so, you may hear the kind of pithy quote, blockchain, not crypto. That's what my role is focused on. So nothing to do with kind of SOL, the asset, and everything to do with Solana, the public permissionless blockchain, as well as other tooling that we have. For example, we have a permission environment, and we have a new token program called token extensions, which make it really easy for issuers to create permissioned tokens on the permissionless public blockchain. And so day to day, I'm working with large asset managers and banks to educate them about, SVM and Solana. Many of them may already be familiar with it, but, some may have, gone down a path, an EVM path, and finding themselves at a point where they're looking to scale beyond what the current capabilities are of the blockchains that they've either built, on their own or are using. And this is why they come to Solana. It's super fast, super inexpensive, incredibly scalable, very secure. And so it's really just holding their hand to bring them along to the Solana ecosystem.
Yeah, Nick, for a lot of our listeners that are newer to, blockchain in general or coming from traditional finance, would love, because you probably do this every single day, could you explain like M5 for, the public Solana blockchain versus say permissioned environments?
Sure. So Solana is an open source public blockchain. What that means is you don't need permission to use it as a user, and you don't need permission to build on it as a developer. And that, of course, has enabled it to become, what it is today. I think $2.5 trillion of stablecoin volume, nearly $100 billion of DEX volume. People all around the world using it, 30 million transactions a day, and this is all the public permissionless blockchain. So you can, as a user or as a developer, kind of plug into that ecosystem and that global economy in a self-sovereign manner, right? And that's incredible. But some banks in particular have various regulatory requirements that don't allow them to either hold any crypto, and so SOL, the digital asset or cryptocurrency, is the native gas token of the public blockchain. And so for banks that can't on their own balance sheet hold SOL, they can't transact on the public blockchain, right? So that's just makes it impossible for them to use at the moment, given current regulatory environment here in the United States. And of course, there's different regulators around the world, and some are more permissive, and there are banks building on public blockchains in other parts of the world. For example, Société Générale has a product on Ethereum mainnet. They're a French bank. And MiCA, is a much clearer and permissive regulatory framework than what we have here in the United States. Basically, very little to no, blockchain regulation that's kind of clear in terms of what folks can do. They know what they can't do, but they don't know what they can do. And so as a result, what we've done is enable folks to essentially fork the public mainnet code base and create their own permissioned version of Solana where they can control who validates transactions, controls who reads and writes to the network, as well as control the gas token, either using their own stablecoin or making the Solana permission environment gasless. So that those kind of three capabilities in total allow regulated entities to use the Solana virtual machine without using the Solana public permissionless blockchain.
Sorry, my kids behind me screaming a little bit. But wanted to go back to your book. I think I was just looking it up. Correct me if I'm wrong, but I believe it's the Better Off After College book that was the bestseller. You got brought to both presidential, in DC to be brought there. Can you talk a little bit about that book? And I don't know if that's influenced kind of your thinking day to day.
Yeah, definitely. So I've always been interested in finance. This comes kind of from my grandfather, who was in that industry, and I've actually been a subscriber to the Wall Street Journal since I was 18. So it's coming on like 25 years now.
Yeah.
And I still get the print edition every day, and my 9-year-old reads it in the morning, so he's getting a head start on me. But I actually started my career as a securities lawyer. I did both of my clerkships in New York City and ended up in Austin, Texas, but in a global practice group focused on venture capital, emerging companies, IPOs, M&A, public and private financings. And, kind of fast forward all the way to when I wrote that book, my interests were really around personal finance and helping people make better financial decisions. There's books like Rich Dad, Poor Dad and The Millionaire Next Door and, kind of all these things. And now you got new kind of voices in that space, like Ramit Sethi, who's a great personal finance kind of guru. You got guys like Bill Perkins, How Not to Die Rich. I don't know if you've read that book, but it's awesome. Or How to Die with Zero, I actually think is the title of the book. But basically, I took my experience and was focused on building technology to help families prepare financially for college, make good choices in college with respect to what they studied, majored in, and ultimately career pathing. So helping guide folks to decisions that would ultimately lead them better off after college, which is the name of the book. But that seems like a lifetime ago. As I'm so focused on the blockchain space now, but it was a lot of fun, and millions of families used our software, which was amazing and rewarding, and hopefully they're all in a better position today than they would have been had they not.
And you actually had to write it because there was no ChatGPT back then available.
I actually had to write it.
Yeah. And Nick, a lot of I know we're jumping back between two subjects, sure. But I think on the side of, say, permission blockchains, would love to hear from you just in we're talking every day. Avi and I are talking every day with, different companies as well as like our audience on what are institutions and enterprises really doing with it, and how does it help my bags, or how does it help the tokens that we've invested in because we believe in the tech. And so it's very helpful to talk to someone like yourself who's having these real backroom conversations every day to see what people are actually participating in. Before we get into some of the projects that you're able to speak on, would love to hear just kind of on the permission side. Let's say someone's bullish on Solana. They're like, hey, this is amazing tech. If you put Wells Fargo or JP Morgan on the blockchain, then everyone's individual bank account, you would immediately know if they're rich or poor. You know exactly what's in there, and it's just sitting. So is the main value prop in some of your conversations say, look, you actually do want this tech. It's very, it's proven at scale on a public, landscape, millions of users. But you want it in a permission environment because you want privacy for all of your users, so that no one knows exactly, by searching on SolScan, exactly, how many tokens or, US dollars are in your bank account. Is that something that comes up often?
Yeah, definitely. I mean, that's the main. So I think that's a really good distinction, and why asset managers are, more aligned with the public blockchains versus the banks. So the banks get their liquidity from depositors, right? That's how the bank business works. depositors, if the three of us are Bank of America customers, we have deposit accounts. The regulators say that banks have to keep, some percentage cash on the balance sheet, as a percentage of how much deposits they have, right? And the rest they can lend out, right? And that's how banks make money, right? They make very little money on the depositors in terms of, your just normal cash sweep accounts. They make money lending that money out, mortgages and then commercial banking. It doesn't make any sense, for that information to be publicly available necessarily. And certainly regulators today are, very privacy focused. And so are kind of pushing banks to, to the extent that they want to be on the blockchain to use private or permission networks. Asset managers, on the other hand, want to access global liquidity, right? They don't get their money from depositors. They get their money by issuing, securities and people buying and trading those securities. And, that is really good for public blockchains, which have ample, global liquidity, 24/7, 365, FX markets, on-ramp, off-ramp, all that good stuff. And so this is why you see something like a BlackRock or Franklin Templeton with their money funds that are on public permissionless networks. And, if who owns that wallet address, you can, figure out, who's moving that money and how much, money they're moving. Solana has developed some tooling that enables kind of some hybrid confidentiality on the public permissionless ledger. So the token extension program has a token extension called confidential transfers, which is basically more aptly named confidential transfer amounts. So basically, if you have enabled confidential transfers for a token, it would encrypt the amounts that are being sent of that token. So Jody, if I send you, $5, it would show that wallet A sent wallet B that token, but the amount would be encrypted. And in your wallet, you'd have two balances. You'd have kind of your public balance and you'd have your encrypted balance. And so you, of course, can decrypt the balance and see, your full set of transactions as well as your total balance. But someone looking at the public ledger would only see your public balance and your public transactions and wouldn't see the amount of that confidential transfer using token extensions. And there are other protocols like Light and Elusive on Solana if you wanted to enable more, kind of privacy on the mainnet blockchain without having to use a permission environment. But banks, are generally building on private ledgers or permission environments today to not just for privacy reasons, but also because of the constraint that they have around not being able to use the cryptocurrency at all.
Mm-hmm. Can you talk a little bit about the delineation, I guess, between the Solana Foundation and how foundations, I guess, work versus what people are probably familiar with Solana, the token? Yeah, start with that.
Sure. So Solana Labs is the company, like the progenitor of the Solana blockchain. They built the Solana blockchain, and the TGE was, at Solana Labs. And at that time, they gave the Solana Foundation a grant of SOL, and then created the Solana Foundation as a nonprofit. It's based in Switzerland, and the mission of the Solana Foundation is to, support and grow the Solana ecosystem. And so we do that in a variety of ways, and marketing support, DevRel support, and grants. And Solana Labs is developing things like the Saga mobile phone that you mentioned. They have a product called GameShift, as well as a loyalty program product called Bond. And also the Solana Ventures org, where they make, minority investments in startups. That's also at Solana Labs. There's also another entity called Anza, which recently spun out of Solana Labs, and they are maintaining the Solana Labs validator client that's been rebranded the Agave client. And they're also working with other independent developers of validator clients. So like Jump is building a new independent validator client called Firedancer, and Syndica is building an independent validator client called SIG. And so Anza works with those folks that are building the validator clients, and of course maintaining the Solana Labs validator client as well.
Mm-hmm. Quick follow up on that. Solana has been around, and I think it's the top coin obviously right now. The last, I'd say, year or so picked up this narrative around like the meme coins. Now you on the institutional side of things, what's the feeling inside of you guys like embrace the memes, and then is that difficult in your position going to try to talk to banks afterwards and they view you guys maybe through that lens? Or
at first I was like maybe having a harder time like figuring out the narrative there, but I think today we very much embrace it, and I think there's a few things that are really positive that come out of meme coins. One is liquidity, and that liquidity helps the entire ecosystem, and there's just tons of liquidity on Solana. In fact, it's the kind of most vibrant blockchain economy in many ways, if you want to think about it like that. Two, because so many people are introduced to the blockchain, retail customers, so many people are introduced to the blockchain through meme coins. That leads to wallet adoption. That leads to folks kind of doing other things in the Solana ecosystem, and also just like brand recognition. I mean, everybody's heard of Solana now, which is amazing. Well, not everybody. There's nearly 8 billion people on Earth. We got a long way to go, but a lot of folks have heard of Solana in part thanks to meme coins, and then that's the beginning of their introduction to the ecosystem, and they go and they check out other things like Drip House and a lot of the really cool products in the ecosystem, Helium, Teleport, etc. And then three, I think the number, just like the sheer volume of transactions, meme coin transactions, and just the dollar amounts, there's real dollars being put to work there, pressure test the system. And so, if I'm an institution, a large financial services company, an asset manager, a bank, and I'm looking at what blockchain technology I want to use, well, I want to use the blockchain technology that has been pressure tested the most at scale, because I know if it's good enough for millions of people and billions of dollars, it's probably good enough for me too. And there's really only two blockchains that have achieved that kind of scale: Ethereum mainnet and Solana.
Yeah, I think we saw there's some good tweets on it, but there was 3 to 4 systems last Monday, that are traditional like ATSs or back end trading systems that actually broke when the market was like selling off. But then you had these massive, like, say, liquidations or, the trading volume on the blockchains that were actually doing really well. And I feel like that's, to your point, coming from maybe Solana in the past that had criticism for, having outages and not being able to handle speed and volume, to now, nobody else, I feel like no other blockchain is tested in the same way, maybe Ethereum, on just the amount of like new users, new wallets, new token launches every day, crazy volume when like a meme pops off. On the side of, like narratives going beyond memes, what's been the kind of the latest with you in conversations with RWAs or, tokenized assets? Like we were talking to Elements last week, Odai, we know him over there, and he's tokenizing, mineral rights, which is certainly like it fits our audience of tying in Web 2 and traders and asset managers into Web 3. I'm sure that team, but like what can you say about them and what can you say about similar projects?
Yeah, I mean, it's really exciting, right? We're still so early in bringing kind of the traditional financial markets systems onto the blockchain, and it's thanks to innovators like Odai and the Elements team, like the Etherfuse team, like the Credix team, and Bridge Split and Homebase, and there's so many others that Ondo, folks tokenizing all sorts of assets. Some of them are securities, like Ondo tokenizing BlackRock treasuries. You got folks tokenizing, like Etherfuse is tokenizing Mexican sovereign debt. You got Odai and the Elements team tokenizing oil and gas mineral rights. You got Baxis tokenizing spirits. You got Devin tokenizing wine. And the sky's the limits. And there's so much exciting stuff happening. And I think all of these are great example use cases for what's possible. And, the trading in some of these is that you got different volumes, right? You got Ondo, who's in the hundred of millions, and then you got some of these that are in the single digit millions. In any event, this is still all very small in the grand scheme of, kind of global financial assets, which just shows how early we still are. But these folks that are out there, at the front edge of the wedge, kind of proving what's possible and kind of paving the path for some of these more traditional financial players to ultimately follow is really important, because they're figuring out how to write contracts that kind of achieve the various goals that they're trying to do while still being compliant with the various regulatory frameworks that they have. And that's another part of it. You've got issuers all over the world, right? You got Credix in Latin America. You've got Etherfuse in Mexico and Central America. You've got folks issuing out of the Middle East. You got folks issuing out of Singapore. You got MiCA in Europe. You've got the FCA in the UK, and each one of these has different regulatory oversight that they need to comply with. BridgeSplit and Homebase have actually been developing an RWA standard on top of token extensions called Medici, which is really cool, which will basically make it easier for issuers of tokens on Solana to take and deploy using token extensions without having to write code in Rust. They can just implement Medici with JavaScript that basically take the various regulatory frameworks that they need to comply with and, kind of wrap it in a very simple to deploy program. So, there's so much innovation happening in the Solana ecosystem in the RWA space, and, it's super early. We're just getting started.
Do you, I don't know if this is like necessarily a fear, it's probably more upside, but, how many of these institutions are kind of just waiting on the sideline for regulations to be more cleared, and then they do this themselves, right? Is that a fear for a lot of the companies or folks you talk to in the space, or is it more of an opportunity where it's like, okay, they'll be leveraging Solana and then more and more volumes will come through that?
Well, so I think maybe I'm interpreting your question as should these startups that are kind of at the leading edge of the wedge be concerned that more traditional financial?
Yeah, do you think? Yeah, you think they'll be like acquired? In the next
maybe.
years?
I mean, that's kind of how tech innovation has always happened, right? You've got small startups, some of which become big companies, right? Other which get kind of brought into other organizations, and some fail, right? And I think you're going to see that same distribution among startups that are building RWA as you would with any type of industry. You've already seen that to some extent. So like Securency, for example, which was an early tokenization platform, ATS, regulated here domestically in the United States by the SEC, acquired by DTCC, which is the organization that settles all public equities trades in the United States. I think something like $4 quadrillion worth of annual trades they settle. And now their digital assets platform is underpinned by the Securency asset that they acquired. And so ultimately DTCC will have a much bigger impact than Securency probably would have as an independent organization, but that technology is being rolled in part of something that will, lead to how digital assets will be traded, on exchanges here, in the United States.
On the side of really on your conversations, and everyone I'm sure listening, or people that are in just crypto in general or blockchain, we have certain talking points and pros and cons and explainers that we do to explain why certain tokens, and a lot of the feedback is people point at like token prices, and they'll say like, you're explaining to your family at Thanksgiving, and they're saying, well, yeah, but this is super volatile, didn't you not see the price last week? And from your seat as driving institutional adoption, driving corporate adoption, what are some of the common objections that you're handling, from like a BD perspective? And what are your answers to those objections?
Yeah, I think two main objections on the institutional side, and thankfully I'm getting them less and less. And I think they're at this point quite outdated and not particularly relevant. But the two, to be fully transparent, the two objections I hear are, one, tell me about the outages that Solana's had. Well, first of all, for the last 15 months, I think we've had 99.96% uptime. So we're almost at 4 nines uptime. The Solana blockchain is almost at 4 nines uptime on the past 15 months. I mean, in typical like software SLAs, you're looking at like 3 nines uptime. So we're already ahead of that, right? So that's one that I think is, does that mean there'll never be an outage again? No, of course not. Like the Solana blockchain again is the most used blockchain on the planet. Like take all the other blockchains combined and you don't have as many transactions as there are on Solana daily, right? So, will there be another outage? I don't know, but I would expect there to be, right? So that's one. That said, the last one, there was a patch same day, I think 4 hours of total downtime. And, that had been 12 months since the prior outage, right? Mm-hmm. The second would be, whatever misunderstood relationship, may or may not have had, Solana Foundation or Solana may have had with FTX, right? Obviously, the FTX estate holds a lot of SOL. That SOL has largely been sold off in private auctions, to diamond hands, right? Because these folks will have their SOL locked up for 4+ years. So and at very narrow discounts, right? I think the last SOL auction from the FTX estate was sold at like a 20% discount to spot, maybe less even, with a 4-year lock, right? So, FTX was now October 2022, I think, right? So we're coming on 2 years from that. So hopefully that's ancient history at this point.
Yeah, appreciate you diving into those.
Yeah, we can't go a podcast without asking about like the ETFs, right? So we saw Bitcoin, Ethereum got approved. I was just looking at a headline around Brazil. I don't know if they formally approved it, and what that looks like here in the U.S. I'm sure some things you can't talk to right now during this process, but anything you're able to share, like, is that on the horizon? Is there conversations about this?
I mean, we don't talk about it at the foundation, but I'll tell you, what you could get from a Google search. There's SOL ETFs all over the world. There's SOL ETF. Wisdom Tree has a product in the UK. Figment has a product in Switzerland. Valor has a product in the Nordic growth markets. There's the product you just mentioned in Brazil. There's 2 filings here in the United States. I think Van Eck and 21 Shares have filed in the United States. Grayscale has a SOL product. Osprey has an OTC product. At the foundation, we really don't talk about, SOL, the cryptocurrency. Right. It's really about Solana, the blockchain. But, there's SOL ETF products and ETP products all over the world today, and including 2 that have been filed in the United States. So I don't know. I would expect to see more of them.
That's gotta help your conversations, though, right? Just to have that validation of just, hey.
I think it's like the meme coin thing you were saying. When you got millions of people who have already experienced Solana, by buying a meme coin. I think similarly, if you've got millions of people who have experienced Solana by kind of buying the asset, it helps with the brand name recognition and kind of moves you faster towards kind of talking about the key value propositions of the blockchain, which is ultimately what the Solana Foundation's job is to grow the Solana ecosystem, helping developers and others building on the Solana blockchain grow.
Mm-hmm. I guess another question, kind of following up on that, like the permissions, and we've had many conversations about like CBDCs on both sides, folks from the government that are currently like working on that. We've had other folks that are like severely against it. You go on Twitter, it's a war zone of conspiracy theories and everything. So would love to hear like your take, and especially, working with the institutions. The latest one we talked to, I'm forgetting who mentioned this, but they were first seeing like CBDCs, at least starting off mostly on the institutional side and retailer, humans, individual citizens of the US necessarily wouldn't be using that. Would love your, personal take or, what you could share there.
How do I want to answer this? I think more blockchain adoption is good, right? And so whoever is ultimately, kind of driving wallet adoption and, people, getting comfortable, transacting on a blockchain, the better, right? I also think, abstraction is generally good, not entirely good, but I think generally good, where, we'd like to see more and more people using the blockchain that may not even know that they're using the blockchain. And, the foundation, in partnership with Syndica and some other organizations, recently announced a product called Blinks and Actions. I don't know if you saw those, where you can transact on the Solana blockchain directly from a tweet, on X, which is just amazing, right? Kind of going back to, I think, how many of us got introduced to the blockchain, the Bitcoin white paper, and, a lot of the kind of ideas behind the kind of self-sovereign peer-to-peer network. The more you abstract, the less of that kind of self-sovereignty, you're going to have. If you don't know, if you don't know your seed phrase or haven't exported it and, maintaining it, or using Google to auth and, to your wallet or whatever, obviously there's some trade-offs there, right? I think to get to 7-8 billion people using the blockchain, those are trade-offs we're going to have to make, right? And so at the end of the day, more people using the blockchain, whether it's government issued CBDCs, financial institutions, issuing, money funds on chain, banks tokenizing deposits, I think there, and of course, all the mini crypto native startups that are out there, creating all sorts of really cool, bleeding edge use cases on chain. I think all of it's good ultimately, because we're still at, whatever, tens of millions of global blockchain users. We need to get to hundreds of millions. We need to get to billions.
So Nick, you said earlier, your partner was saying to you, hey, if you're doing crypto at night, you need to really just combine this and work on crypto during the day as part of your day job. What are you working on at night now? Is it AI? Like what's your hobby? Is it tying flies for fly fishing?
I play tennis. I've got 2 kids. But our work is global. And so, I don't even know, what time the day starts and what time the day ends, it was funny. Last week I had an early morning call and a late evening call with folks in Singapore, but it was the same day for me, but it was across 2 days for them. And, I think it's really exciting and cool to be in an industry where you've got 24/7, 365, global markets where it's really bringing the whole world together. And, that's one of the things that really inspired me to go into the industry and keep me really energized about, playing a very small role in helping grow the Solana ecosystem.
Yeah. Jody, I don't know if you had an extra one. Oh, go ahead.
Yeah. I think on the topic of Singapore, Breakpoint's coming up. We have tickets. Blockfuel is going to be a media partner for Breakpoint. So we're excited to just go in and talk about anything really. But ideally on a lot of the RWA stuff that you mentioned here, what are you looking forward to? What are some of the exciting, announcements or events coming up for your biggest conference?
Yeah, so Singapore, September 20 and 21 in Singapore. We're really excited at the Suntech Conference Center. So I hope to see all you there that are listeners today. We also are hosting a small kind of pre-event institutional focused for banks and asset managers called Velocity with an organization called the TIE on September 17 at the Breakpoint venue at Suntech. So, Google that or reach out to me if you're interested in joining us for that. And then we'll have a bunch of exciting announcements at the main event on September 20 and 21 at Breakpoint, but I can't share the tea yet.
You have to go to check it out. So yeah, we're excited to see you in Singapore. We're going to be traveling to a lot of the conferences. So the listeners that are interested in maybe hopping on their own podcast, we should be on site with our cameras walking around the conference as well. And so Super excited to have you on today. It's full circle for me talking to Anatoly about a year ago or so when we launched the phone. So thanks again for popping on.
Well, thanks for having me. And none of us would be here if it wasn't thanks to Toli Raj and the rest of the team that kicked Solana off. And sky's the limits.
Yeah, Nick, it's been a pleasure. Thank you.
Thanks.